The Treasury Department just out with new tax incentives for EV battery production, a market dominated by one country right now, and that's China. Phil LeBeau has the details and whether this could be the long-awaited boost to EV battery production here in America. Phil.
It will be, Don. There's no doubt about that. The question is, how quickly will we see that production, not just of battery packs, battery cells, but battery components? How quickly will it ramp up? So here are the new EV tax incentives that go into effect on April 18th. Remember, the most you can get is $7,500 if it's built here in the U.S., but it comes down to the battery. If the 40% of the value of the critical minerals in that battery are processed or sourced in North America or free trade countries. If that happens, then you get $3,750. Then it ramps up by value up to 80% by 2027. The other part of this, it comes down to the battery components. We're talking about cathode, anode, copper foil. If 50% of the value of those battery components are coming from the U.S. or free trade countries, then you will get another $3,750. And again, it ramps up to 100% by 2029. So what's the real implication in terms of how many people, or actually how many vehicles, that's really what we're talking about, will qualify for the full $7,500 or even $3,750? We're going to see a hit in the number of vehicles that can get that, and that may impact EV sales, at least in the near term, maybe the next year, year and a half, because so many vehicles will not qualify. So much is sourced in China, still sourced in China, or processed in China. And then the battery components, while there is some coming from here, a lot of it is still coming from China. Though, when you look at somebody like Tesla, as you take a look at shares of Tesla, which, by the way, will report its deliveries for the first quarter over the weekend, Tesla gets its cathode, which is the most valuable part of the battery cell, that comes from a supplier in Japan. So Tesla is likely to have at least $3,750 still applied to its vehicles. All of the automakers, Dom, they're figuring it out. And by April 18th, we will know what vehicles will still qualify for either $3,750 or $7,500.
And of course, that is tax day here in America, April 18th this year. That's the significance there. Phil, stay with us. Let's also bring in George Gianarikas, an analyst over at Canaccord Genuity. George, as Phil mentioned, Tesla is dominating EV sales in the U.S. That stock is the best performing stock in the consumer discretionary sector in the first quarter. You have a buy on the stock. Do you see these new rules, as the Treasury lays them out, as a catalyst for Tesla and maybe the EV producers writ large, the sector as a whole, from here?
Look, I firmly believe that Tesla has done the Treasury's job for it. I mean, if you remember earlier this year, they cut prices materially across the board to spur demand because they had seen a weakening at the end of 2022. And they're able, hopefully, to maintain their margins, auto margins, at least 20%. So through innovation and through constant cost cutting, Tesla has spurred market demand through price reductions. And so that's why they're the leader in the space. That's why we think they'll maintain the increased market share throughout the year. And as a matter of fact, we pulled some data from China together from Q1. And as far as we can tell, the Chinese auto and EV market has weakened materially, but Tesla has actually could be up sequentially in China, which would be an incredible feat. And that's on the back of their price cuts, which has led them potentially to increase market share in Q1.
Okay, so George, I guess I'm curious from a bigger picture, macro perspective, as you lay out the case for EVs here in America, at least. How important are tax credits to the growth story of the U.S. EV makers or North American-based EV makers as opposed to those coming out of China? The reason I ask is because it appears as though China's EV manufacturing is rivaling U.S. EV manufacturing. And is that a spur of demand because of these tax credits, or do they largely not factor into the global story for many of these makers?
No, I think they matter a lot. They obviously matter for Tesla too, but less so because Tesla's been able to bring down their prices and they haven't had the benefit of the $7,500 for a couple of years at least. But to answer your question directly, these tax credits are important. I think what the government is trying to do is balance spurring the demand for electric vehicles, while at the same time compelling companies to bring back production of batteries, cells, and components to the United States. So they are important. Today's guidance was expected. There are some nuances around which countries are in the free trade agreement, which countries we can't use in terms of being able to use the EV tax credit. But at the end of the day, the government is trying to create a balance between spurring EV demand and also compelling companies to bring back production to the United States.
No, Phil